Welcome to the Deep Dive. We're here to cut through the market noise and get straight to the stuff that matters.
That's the plan.
Today, we are diving right into the Q2 2025 earnings call from Indivior. You probably know them. Big name in opioid use disorder treatment.
Right, a really critical space.
And this past quarter, well, they didn't just give us numbers. They laid out this whole strategic roadmap, their action agenda, that really got the market buzzing.
Yeah, it definitely caught people's attention. It feels like more than just a good quarter. It's maybe a bit of a narrative shift for them.
So our mission today, let's unpack these results, this action agenda, and figure out what's really driving things at Indivior right now.
Sounds good. The market's reaction was pretty strong, and you can see management isn't just looking back, they're pushing forward. It's about growth, profitability, the whole picture.
Okay, let's start with the headlines then. The Q2 financials. They reported non-GAAP EPS, that's earnings per share, without some of the one-offs of 51 cents.
Which is huge. The consensus was way down, like sit at $100.25, now 26 cents maybe.
Yeah.
Exactly, nearly double.
Yeah.
And revenue, $302 million. Again, comfortably ahead of the, 240 million-ish consensus, still up 1% year over year, too.
You just don't see beats like that very often. It's not just that they beat, it's the size of the beat.
Right.
It makes you wonder, were the analysts just too cautious? Or is something really clicking operationally inside Indivior maybe faster than we thought?
Good question. Because that kind of performance, it definitely sends a signal. The market certainly reacted immediately.
Oh, absolutely. Suggests real strength under the hood, not just a lucky quarter.
Okay, let's dig into those numbers a bit more then. What was the engine here? SUBLOCADE net revenue, that hit $209 million. That's up a solid 9% year over year.
And the U.S., part of that matched the 9% growth. SUBLOCADE's performance, with dispenses up 6% year over year, was definitely the star.
But it wasn't just SUBLOCADE, was it?
No, not at all. You can't forget SUBOXONE Film. Management actually pointed out some unexpected pricing stability there in the U.S. market.
Yeah, better than they thought it would be internally. So that really helped boost the overall results, too. It's kind of a 1-2 punch. SUBLOCADE growing strong, SUBOXONE holding up better than expected.
And that flows through to margins, right? That's a big jump there.
Huge jump. Gross margin went from about 74% last year up to 83% GAAP, 84% non-GAAP this quarter.
Wow.
Yeah, that tells you a couple of things. Better product mix, obviously leaning more on the higher margin SUBLOCADE, but probably also some early signs of them getting costs under control.
Interesting. And speaking of financials, they're changing how they talk about profit, focusing now on adjusted EBITDA. It was $88 million this quarter. That feels like a deliberate shift.
It absolutely is. Moving to adjusted EBITDA, earnings before interest, taxes, depreciation, amortization, it strips out some of the noise.
Is a clearer picture of core operations.
Exactly. Core operating profit, cash generation potential. It often signals a wider strategic rethink. You have to ask, what does this tell us about their future priorities? Especially now they've delisted from London, focusing just on the Nasdaq. It feels like they're really tuning into the U.S. market.
Yeah, that makes sense. Streamlining the message for U.S. investors, where EBITDA is, a pretty standard metric. And they're certainly in a strong position to execute. They ended the quarter with, $538 million in cash and investments?
Yeah, a big jump, up $191 million just since the end of last year.
That kind of cash buys you a lot of flexibility.
It sure does. It's not just a sign of a good quarter, it's a war chest, really. Fuels that action agenda, maybe future M&A, gives them a cushion. It's a real strategic asset.
Okay, let's talk about that action agenda. This is where it gets really interesting, I think. The new CEO, Joe Ciaffoni, he just took over in May, right? And boom, lays out this multi-year plan.
Wasted no time. And it's ambitious. Phase 1, they're calling it Generate Momentum, runs through the end of 2025.
So what does Generate Momentum actually involve?
Well, the core focus is twofold. 1, sharpen up the U.S. commercial side for SUBLOCADE, really drive that growth engine. 2, simplify the whole organization.
Simplify how?
Concrete steps. Like we mentioned, delisting from London, becoming Nasdaq-only. That cuts down regulatory hassle, aligns them better with U.S. investors. They're also consolidating operations, getting rid of non-core stuff, basically trying to become leaner and more focused.
Makes sense. Get the foundations right first.
Exactly. And that momentum is meant to lead straight into phase 2 called Accelerate, which kicks off right at the start of 2026.
And accelerate means?
Boosting profitability and cash flow and doing it faster than revenue grows. That's the key part. Real operational leverage.
And then there's phase 3, breakout, further out, second half of 2026. That's acquisitions.
Commercial stage acquisitions, yeah. So once they've got the momentum and accelerated the bottom line, they start looking outwards to add growth. It sounds like a total overhaul, not just tinkering.
It really does.
Yeah.
The CEO even said they're not dabbling around the fringes. They're going after the core of the cost structure.
Right. He used words like meaningful and significant reductions. Think supply chain, admin costs, maybe sales operations. And the idea is those savings hit the bottom line fully in 2026 right away.
So not dependent on more sales, just pure efficiency gains dropping through.
That's the plan. And they're backing it up by refreshing the board, bringing in new execs like the chief commercial officer, Patrick Berry. It signals real commitment to this new direction.
Let's zoom back in on SUBLOCADE then. Number one, prescribed LAI, long-acting injectable for OUD. Over 350,000 patients treated. That's huge.
It's a massive achievement.
But management said they were encouraged but not satisfied. What's the plan to accelerate growth even more?
Yeah, that was telling, wasn't it? It
Yeah.
suggests they see way more potential there. The focus now is really sharpening the message from the sales force, making sure doctors understand the unique benefits clearly.
Improving productivity, reinforcing the advantages.
Exactly. And highlighting the new label updates too, things like different injection sites, faster patient starts. That already has like 80% payer coverage.
Which is crucial,
Yeah.
right? Especially with fentanyl out there. Making treatment easier to start.
Can literally save lives. It's about removing barriers.
They also talked about a big gap in the commercial channel.
Only about 25% of SUBLOCADE patients are on commercial insurance, even though those plans cover maybe 60% of the relevant lives.
That's a huge disparity. How do they close that? I think I heard something about direct-to-consumer too.
Right. So first, they need to fix issues in the specialty pharmacy channel, where getting prescriptions filled for commercial patients isn't as smooth as it could be. That's one piece.
Okay.
Then, yes, the push into digital media for doctors and direct-to-consumer ads. The thinking is, if they can get patients to ask for SUBLOCADE, and they said the pull-through rate is over 80% once a patient asks, that could really move the needle.
Especially when you consider the overall market. LAI penetration in the U.S. for OUD is still tiny, right? Under 8%.
Yeah, it's incredibly low given the scale of the crisis. So for management, it's not just about fighting for their current 75% share of the existing LAI market. It's about growing the whole LAI market. Huge untapped potential.
Okay, what about R&D? With all this focus on commercial execution and cost cuts, are they still investing in the future pipeline?
They are, but it's more focused now. They've basically prioritized two specific phase 2 assets for OUD, INDV 601 and 2000.
Okay.
Both should be fully enrolled by year end, and they expect data readouts by the end of Q1 2026. So they're doubling down on their core area, OUD.
And spending.
R&D spend was actually down 20% this quarter compared to last year, but it's probably not scaling back innovation so much as just being more disciplined, more targeted with those investments, fitting that broader action agenda theme.
Right, efficiency everywhere.
Yeah.
So with all this positive momentum, the new strategy, it makes sense they raised the full year guidance for 2025. What are the new numbers?
Yeah, they bumped up the full year net revenue guidance pretty significantly, now expecting $1.03 billion to $1.08 billion. That's up from around $955 million to $1.025 billion previously.
Decent jump. And SUBLOCADE specifically.
That guidance went up too, now $765 million to $785 million, about 3% year-over-year growth at the midpoint there.
And the new key metric, adjusted EBITDA.
That saw a big lift. Now $275 million to $300 million expected. That's a 20% increase at the midpoint from what they were saying before.
Okay, 20% jump in expected profit. That signals some real confidence, not just in selling more, but in actually running the business more efficiently.
Exactly. Confidence in that operating leverage they expect the action agenda to deliver.
So let's tie this all together. What does this mean for you, the listener, looking at Indivior? It feels like a real turning point.
I think it really does, like a narrative reset. Remember, 2024 had its challenges, the Brixadi competition, the ups and downs with criminal justice system funding.
Like felt a bit like they were playing defense.
Exactly. This quarter feels like a shift from damage control to, well, controlled acceleration. And look at the stock performance that backs that up.
How so?
Well, over the last 3 months, INDV is up something like 67%. Compare that to the broader healthcare sector, the XLV ETF, which was maybe up 4-6%.
Wow, big difference.
And over the past year, INDV is up a staggering 138% versus about 9% for the XLV. So this quarter's clean beat and the raised guidance, it really validates those recent moves like going Nasdaq-only, getting into the Russell index. It makes them look more investable to the U.S. market.
Okay, the tone is definitely bullish. But are there things investors still need to watch out for? Any potential headwinds?
Oh, for sure. No journey is perfectly smooth. While management sounded positive about SUBOXONE pricing and other channels, you still have to watch Brasadi. How does that competitive dynamic play out?
Keep an eye on the competition. Makes sense.
And that criminal justice system funding. Management called it a new start point after Q1, but it can be variable. That's just the nature of it.
But execution risk is key.
Absolutely. Can they actually deliver on this action agenda, simplify the business, get those cost savings? And critically, can they significantly boost LAI use in the U.S.? That huge, undertreated OUD market is the real prize. Their success hinges on executing that plan.
All right, now for our favorite part. The "this is not financial advice" segment. Time for an outrageous but plausible trade idea based on everything we've just heard.
Okay, here's a thought. Given this clear roadmap, the focus on cost cuts, accelerating profit growth faster than revenue in 2026, maybe a long position in INDV makes sense.
Just buying the stock.
Yeah.
Or something spicier.
Well, for the slightly more adventurous, maybe consider a long call spread, targeting, say, Q1 2026 expiry.
So an options play betting on a significant rise by early 2026, but with defined risk. Why then?
Because I'm not sure the market has fully baked in the potential size of these cost savings yet. Management used strong words, meaningful and significant. If they deliver on that in 2026 and show progress on the accelerate phase,
You could see the stock re-rate higher.
potentially, yeah. Especially as that cash pile grows and they start talking more seriously about phase 3 acquisitions, there could be quite a bit of upside if they execute well. Again, not financial advice.
Absolutely not financial advice. Okay, what an incredible deep dive today. We've hit the strong Q2 beats, unpacked this ambitious action agenda, and looked at the momentum behind SUBLOCADE. Definitely a company making some bold moves.
Indeed. They've laid out the map, but now they have to walk the path. Executing that action agenda, cracking that underpenetrated OUD market, that's the challenge. Thinking about phase 1, that generate momentum phase, focusing on the U.S. and simplifying. What single step do you think is most critical to set them up for that 2026 acceleration?
Good question. For me, maybe it's proving they can actually achieve those meaningful cost cuts through simplification. If they nail that early, it builds a lot of credibility for the rest of the plan. It shows real discipline. Well, that's something for you all to ponder. Thanks for joining us on the Deep Dive. Remember, everything we discussed today is for informational purposes only. It is definitely not financial advice.
Always do your own research.
We look forward to bringing you more insights from the calls shaping the market next time.